YEVGENIA, SYOMINA, and ALEXEI KRASNOV live with their 2 children in a Moscow studio apartment purchased 6 years ago through a foreign lender. The value of the Russian ruble has since plummeted, and that has forced the family to review their spending plans just ahead of the holiday season.
Just yesterday we were sitting with my wife and discussing what to do with New Year's presents. Maybe we should not give out any. Well, after planning the family finances, we understood that our mortgage payments, that have increased at least 2-fold or even more, hit us in the wallet hard.
The family fears it could be worse. Alexei works in a bank and is worried he might lose his job amid the Russian banking crisis.
We already have had several waves of layoffs, and they warn that next month or in a couple of months there will be more cuts. So of course we feel this instability, and it is yet unclear how it will affect our family.
One thing the family does know is that they cannot afford to sell the apartment because its market value has dropped.
We would really like to have the 3rd baby, but we cannot afford to have one in this apartment. And we cannot move out of here because our mortgage will not allow us to do that.
Former Russian Finance Minister ALEXEI KUDRIN brought more bad news on Monday.
For the first time since 2000, under Putin's and Medvedev's rule, the household income of ordinary people will decrease. It will happen next year.
Kudrin said Russia's imports will decrease 40% next year, severely affecting a number of construction and investment projects. He added that the smoldering conflict in Ukraine may lead to tougher sanctions, which would undermine Moscow's measures to prevent recession. Russian officials have blamed the West for the country's financial woes. But some analysts say the next 3 years will be tough for Russia's economy, even if sanctions are lifted.
The fundamental reason for the decline in the ruble is the fall in the oil price. The oil and gas exports of Russia represent a very large part of the economy. They essentially underpin the balance of payments of Russia, the ability of Russia to import.
Russian regulators took over a leading retail bank Monday and are securing a $550 million bailout to save it from bankruptcy. Banks across Russia reported a surge in depositors taking out their money in the past week, and some reported difficulty getting it. The central bank increased interest rates from about 10% to 17% to steady the currency. Zlatica Hoke, VOA News, Washington.